Welcome back, everyone. We have a really fun video to get into today. This is actually one of my favorite videos to make. Every 6 months, Piper Sandler, which is a research firm that does a lot of polling and a lot of surveys, well, they release the results of this big survey they do with teens. So they survey a lot of teenagers, and the goal of this survey is to find out what brands in particular are the most dominant brands, which ones are the most popular, and which ones are moving up the ranks. So they outline it on this big infographic here. They give us a lot of insights into it. And the reason that I like looking at this and keeping track of it is I think if you're investing in companies, in my opinion, the brand value of a company is one of the main aspects we should be looking at. In fact, on my compounder checklist, I can bring it up here, we look at the top thing. Number one is strong franchise durability. Basically, every company that compounds for long periods of time has a franchise. They have brand value. A brand is a franchise. So if you think of Pepsi, that's franchise durability. They have Frito-Lay. You think of Coca-Cola. You think of Nike. You think of any company, McDonald's. These companies that continue to grow year after year after year have to have that franchise durability, which is their brand value. So I think this will be a fun one. And we're going to gain some insights here. We're going to learn something about different companies and different brands, how they're evolving. If you like this type of content, hit the thumbs up button. It's free to do. It helps out the channel. And also subscribe if you haven't already. We have some good content that's going to be coming out in the future. Now let's go ahead and first, before we jump into the actual data here, I want to look at the actual demographic. The way that they do this is really professionally done. This is a good survey. They have a massive amount of respondents, 14,500. That's very statistically significant. They have male, female, non-binary. They separate it from Southwest, Midwest, Northeast. It's demographically diversified. The average age is 15.8. So you have 15-year-olds, 16-year-olds. Average household income is 66,500. So that's the average. They say 39% of teens are currently employed part-time. So we have them, about 40% are working somewhat part-time. That's the demographic. Really well done survey. If you look at it from a statistical significance, it's really representative of what's happening, at least in the US. So let's first start off with some of the bullet points here, some of the highlights and trend changes that they think are worth mentioning. They say that teens are spending more money this year than last year. Makes sense. Things are normalizing a little bit over the past couple of years. So teens are spending more money, and it's led by females. They're spending more than males. They say for food was the number one wallet priority for male spending at 23% share. So 23% of males spending goes to food, and clothing reached its highest level of female wallet share since 2012 at 30%. That's a pretty big size of the wallet share for clothing. Teens allocate 7% of their shopping time to secondhand stores. This is something where I don't think any investment whatsoever in secondhand stores. I don't have any TJ Maxx or eBay or anything like that. Everything I have is firsthand sellers, but apparently that's a growing part of their shopping channels. They say that the core beauty wallet, cosmetics, skincare, fragrance, stood at $264 per year, increased 20%, led by cosmetics that was up 28%. Skincare held the highest priority of beauty spend at $103, followed by cosmetics and then hair care. I like seeing these increases in beauty trends. I just did a video highlighting a company that I think is a strong compounder. I actually think it's undervalued right now, which is Ulta Beauty. It's a retailer that aggregates and combines a lot of beauty products. And I just see big secular long-term trends. And this type of data further confirms what I've been saying about the company. I think these long-term structural trends in beauty, they're going to continue on because teenagers, young people, old people, it doesn't matter. I think we'd see similar trends with older folks, but everybody wants to look good. These companies sell products that make people look good. So I think they're going to continue going on. They say weekly usage of VR devices, Meta investors might want to pay attention to this one, moved up from 14% to 17%. That is very good news for Meta. They are betting heavily on the VR devices, and seeing any incremental change positively, I think, is a good thing. It's not negative, which is the worst case scenario. If I saw this going down, I'd think very poorly of their efforts, but at least it's going in a positive direction. Last spring, they say 26% of teens own a VR device, flat versus spring 2022. So they're using it more. The owners that have it are using it more, but the amount of teens that actually own a VR device is flat Obviously, they need to work on improving that. And they are. Meta's working on getting it in more people's hands. Video games are 12% of teens' wallet share versus 14% last year. Does not surprise me. We've seen these trends with Microsoft, the gaming portion of their business. It's in a decline because they had a huge booming year in 2020, and that just didn't last. People, once they got out of the home, they wanted to go on vacation. They're not spending as much time. I think it also hit Apple too with all the App Store spend. So that makes sense that this went down. It actually went down a little bit less than I thought it would. 52% of teens cite Amazon as their number one favorite e-commerce site. 52% as number one. Obviously, Amazon is a company that I'm very bullish on. I'm invested in. I think it's amazing for so many different reasons. I think it's heavily undervalued. Even when it goes down further and further, I get more tempted to buy more and more of the stock. But I see these type of surveys, and I don't think that this is going to go down. 52% of teens citing Amazon as their number one. I think it will increase over time. They mentioned the other ones here. Shein as one of them. Nike, another big one that moved off of Amazon. I think it's one of the few companies that can successfully do that. Lululemon, PacSun, and Spot took number 2 through 5. So these are the other ones, but Amazon remains dominant even among teens. Nike remains the number one brand for all teens in both apparel, 31% share, and footwear, 60% share. Nike is dominant amongst teens, completely dominant, both in apparel and in footwear. Nike's a company that is in a huge sell-off right now. I'm invested in the company. I actually increased my stake around 8 times. So I owned like $1,000 or $2,000 of the company, and I have increased it to around $10,000 because the company's come down like crazy. It's another one I think is undervalued. Their inventory issues, the retail apocalypse, the over inventory that all these companies are facing, in my opinion, is short shelf life stuff. It goes away quickly. We'll move on to different things. Their margins will go down for a season, and then they'll be back on track. And the brand value, the thing we look at here, they own the market with teenagers, and this is a cultural driving thing. These are the people in many cases making TikToks, making media that other people consume, and they drive big changes in consumption of things. So this is an important part of Nike. Their brand value is paramount to the investment. Another surprising one, but a good surprise here, is Crocs. Remember Crocs? This is a company that I have as a small holding. I only invested $2,000 in it, but it's one that I think is heavily undervalued. Look at any of the metrics of Crocs. The growth rate, the returns on capital employed, the free cash flow yield, the PE ratio, anything with this company, and I think it's heavily undervalued. But then I see data like this. Crocs increased from number 6 preferred footwear to number 5. And then remember, even though Crocs brand itself is moving up the ranks, just the Crocs brand, Crocs also bought the company Hey Dude, which is another newer shoe company. And Hey Dude moved from number 9 to number 7. So Crocs has 2 different brands that really is their company. Crocs now is part Hey Dude and part Crocs. They paid a lot of money for Hey Dude. It's a big part of their company. And both of these are moving up the list with teens. They're not moving down. A lot of people assumed that after the TikTok viral bump in 2020 of Crocs, the brand would move down. No, it's continued to move up even in 2022. That's something I very much like to see with my investment. I know Crocs is a small holding, but I'm looking for 100% gain with it. That's what I'm wanting from Crocs. Converse gained 200 basis points of share year over year, maintaining the number 2 ranking, and Under Armour dropped out of the top 10. I don't know what's been going on with Under Armour. That's been a sad story for a while. They used to be a premium brand, but they devalued their brand over time, and I think it's just been a struggle since then. Elf maintained its position as the number 1 cosmetic brand, gaining 500 basis points share year over year and 16% of female teens. Elf is, from my feedback, it's I think one of the cheaper, more affordable makeup brands. So it makes sense that teens that have very limited budgets would focus on Elf because it's more of a value brand. And I think that that's a good thing to be positioned when there's a lot of other brands that are really expensive to have a more value oriented one. Bath and Body Works came in its number 1 fragrance brand among female teens, 38% share. And then you question the survey. Ulta remained number 1. Ulta, Again, if you haven't seen my research on it, go to the previous video. I think it was a good one that went over this company if you're interested in it. But they're the number one preferred beauty destination at 42% share. That is massive share. And it also held the strongest beauty loyalty membership at 62% of female teens with a membership. 62% of female teens, not that shopped there, but just in general had a membership to it. That's pretty incredible. They do such a good job at converting people to their loyalty program. Chick-fil-A, no surprise here. I would be shocked if it wasn't number one. Like I said earlier, it's always, in my opinion, it's always Chipotle and Chick-fil-A. Those are two restaurants I always see in these teen surveys, but Chick-fil-A remains number one. They're so consistently good. You know exactly what you're going to get. They run their restaurant so good. They have 18% market share. It actually moved down 200 basis points. So slight decline in Chick-fil-A, which probably means that other companies are upping their game a bit. They say followed by Starbucks at 17%. Starbucks is just behind Chick-fil-A, 17% to 18%. And Starbucks gained 600 basis points year over year. Massive gain for Starbucks. Disclaimer, I can't invest in Chick-fil-A, or I would. I think a lot of investors would be invested in Chick-fil-A if they could. It's privately held. But I do have a sizable investment in Starbucks. So when I see Starbucks going up 600 basis points year over year, coming up to be number one amongst teens, that's something I very much like seeing. I am very positive, very bullish on Starbucks. I think I'm going to make a lot of money on the company because of its organic fundamental growth. So that's one I like to see. Chipotle at 13% plus 300 basis points. No surprise there. These ones are just amazing restaurants. Starbucks, Chick-fil-A, and Chipotle are well managed, have incredibly good cost structure, have good brand loyalty, obviously. It doesn't surprise me to see them on the top of the list. Teens plan to eat less plant-based meat. Wait, let me see if I read that right. Teens plan to eat less plant-based meat. Of the 14% of teens that do consume plant-based meat, 23% of teens plan to eat less plant-based meat, up from 17% in fall. That's interesting. It's almost like it's worded in reverse. I'd assume teens would say, I want to eat more plant-based meat. They're saying that they plan to eat less of it. I'm not sure what that means. They're planning on eating less plant-based meat. I'm not into that health switch to plant-based meat. I think I just eat vegetables, but I like meats as well. I'm invested in Texas Roadhouse. They are the biggest buyer of beef in the entire country. So obviously I'm not on this trend. This isn't one that I followed. I haven't invested in any single company that has to do with plant-based meat, and it's not something I'm too interested in. Teens report the highest intentions of eating more of the same amount of Nature Valley and Cliff. Goldfish remains teens' most preferred snack brand. That's just comical to me. I don't know why it's Goldfish. That seems like something that would be more like little children, right? Goldfish just seem like a little child snack. Apparently popular amongst 16 and 17-year-olds. Beats me. I'm out of touch with that group, so I'm surprised to see Goldfish there. TikTok improved as the favorite social media platform, 38% share by 400 basis points versus last spring, and Snapchat was number 2 at 30%. TikTok, we can't look at the financials, but they just recently had a report that gave some insight to what's going on, and they're losing $7 or $8 billion. So they're buying growth, they're paying for it heavily, but they're a money-losing company right now, which doesn't bother me. The company, I think, has a lot of problems. It's not one that I'm exactly excited to see take off, because I think TikTok has a lot of issues. But regardless, that one seems to be doing really well. You have Snapchat there in number 2 that's actually growing. Now, Snapchat is a company that currently has horrible financials, but the one thing good about this company is they are continuing to gain users. The actual fundamental growth of their users and all those metrics of engagement are growing steadily. So this one can turn things around and improve their financials over time if they continue to grow. They say while Instagram was number 3 at 20%, minus 200 basis points. So Instagram moved down. When I look at this, again, I'm not invested in Meta, and I get the company's trading at a comically low valuation. Let me bring up Meta here on Qualtrim. I'll show you what I'm talking about, because a lot of investors, I'll say, are invested in this company, and they're just perplexed. They're bamboozled of why the company trades down basically every single day. Again, we have a note here from Qualtrim saying Meta Platforms shares are trading lower after Atlantic Equities downgraded the stock from overweight to neutral and announced a $160 price target. Another downgrade for this stock. Right now it trades at an 11.59 forward PE ratio. It's so cheap, but the problem is it doesn't really matter how cheap a stock is. When you have incremental deterioration, incremental problems with a company, the stock price tends to go down even if the financials don't first reflect it. And there's a lot of qualitative things showing that Meta right now is in a difficult spot. TikTok is growing quickly, taking up more and more market share of teens' time. Meanwhile, you have Instagram that's going down, minus 200 basis points. That's not a development I'd like to see. Teens spend 32% of daily video consumption on Netflix, which is flat versus last year. Now, as a Netflix investor, I'm in this company, so my view is biased here to some extent, but I'm happy to see that it's flat and it's not going down. Because when I look at the landscape of different things you can consume in video content, you have endless options. You have Instagram, you have TikTok, you have YouTube, you have Netflix. You have Apple TV Plus, you have Amazon Prime Video, you have The Rings of Power, you have House of the Dragon, you have all these Hulu series, and then Disney, right? There's so many options. And the fact that Netflix can continue to keep 32% is just incredible. Even with all this rising competition, even with all this money spent, Netflix remains flat. And they say right here that YouTube's even going down. YouTube's down 200 basis points versus last year. YouTube is struggling with tough comps as well. So impressive to me that Netflix has remained flat, even in the face of all of these rising video consumption platforms. Phone is the number one preferred method by teens for customer service interactions. Text and SMS shows the best multi-year gains. I think it is too. It's by far the easiest way to get customer service. Apple has easy customer service for their MasterCard just by using iMessage, and literally someone's there like in 2 seconds. It is the nicest thing ever. If you have a question about a charge, 2 seconds, you can get a response. That's the way customer service needs to happen. 87% of teens own an iPhone. Let me repeat that. 87% of teens own an iPhone out of the 15,000 surveyed. 88% expect an iPhone to be their next phone. So out of the ones that own it, the huge majority expect that to be their next phone. 31% of teens own an Apple Watch. That's impressive. 31% own the Apple Watch. I like seeing that market share go up over time. I happen to own a lot of these companies that are these top brands, and that's not coincidence. Again, I look for companies that have brand value because that usually leads to higher margins, more customer loyalty, and I think that franchise durability of the brand is something very important. So I'm always looking for investments that not only do they have brand value, but I think it's either stable or growing over time. I think their brand value is increasing, and if I think a company has increasing brand value, that's one that I buy. If a company has declining brand value, if their brand's getting tarnished over time, that's one that I'll sell. Now, if we break this down, we can look at some of the top lists here. Clothing and footwear. The top shopping websites, Amazon at 52%. Dominant, we have Shein at 8%, Nike at 6%, Lululemon at 4%. The top clothing brands here, we have Nike, dominating the list. This is, again, a company I'm buying into right now. It's on a big dip. I'm buying it in the dividend portfolio. Nike has 31% market share. The next one is Lululemon, tied with American Eagle at 6%. So Nike owns more market share of top clothing brands amongst teens than the next 4 different brands put together. They're really not even close. The top footwear brand, Nike, 60%. Even a bigger lead. Converse is at 10%. And if I'm not mistaken, Nike owns Converse. So really Nike has, if you invest in Nike, they have 70% of the market share of teens in this category. 70%, a dominant lead. Number 3 and 4 are both 7%, Adidas and Vans. And then number Crocs, another small investment. This is a small company. This company is moving up in the ranks. They currently have 2%. They're new to the list. They bought Hey Dude, which is also moving up in the list. And that's what we like to see. Companies are invested in either being dominant or they're growing, moving up that list. So I like what I see there from the top footwear brands. The top handbag brands, we have Coach at 18%, Michael Kors at 13%, Louis Vuitton at 13%. These are very diversified. There's no dominant market leader amongst top handbag handbag brands. And I don't think I own any of those investments. Now, if we move on to the beauty destinations, so we're moving away from clothing and fashion, we're going into beauty. We can look at the top beauty destinations. So where teenagers go to shop for beauty products. Ulta is number one, 42%. That doesn't surprise me. Ulta has an incredibly well-ran, well-managed business. And again, you can refer to the past video to have an analysis on that. Sephora is number two at 24%. I'm not positive, but I think Louis Vuitton owns Sephora, a company like that. So they're doing good as well. Target's actually at 10%. Target is making themselves into a good destination for this type of shopper. They have Starbucks in Targets now, and over 100 of them. Target is, or Starbucks rather, is very popular amongst teens, again, moving up in the ranks, and Target is as well. So those companies combine, there is some synergy there. They'll go to Target, you get your coffee, then you go shopping, right? Walmart's at 6% and Amazon's at 5%. I think the reason that Amazon is so low in comparison is when you're shopping for beauty products, you want to make sure you're not getting counterfeits. Online sellers have issues with that, even Amazon. You want to make sure it works with you and it looks good. And I think that they have to do that in person more. So I think it's a harder task for Amazon to compete this way. Amazon might be able to do something in the future, but right now they're getting beat by Ulta. In top cosmetic brands, we have e.l.f. as number one. The rest of it's pretty fragmented, 11%, 7%. There's room for consolidation there, but it might be difficult with different income levels and pricing points of these different brands. Top skincare brands, CeraVe at 42%, very top heavy. The next one is 9%, which is Cetaphil. In the top fragrance brands, I also don't own any of these companies. Bath & Body Works is the dominant leader there, 38%. Victoria's Secret is at 16%. Sol de Janeiro, I'm not familiar with that one, but it's at 6%. Ariana Grande, she is number 4 in fragrances with a 5% market share. Pretty impressive. She's leveraged her persona to sell a fragrance brand and do well on it. Chanel is number 5 at 5% as well. I don't own any of those companies. Now moving on to the food category. This one is important because it controls a huge amount of wallet share for teen spending. They spend a lot of money on food. And it makes sense with all of these great restaurants. We have Chick-fil-A number 1, again, a private company. Wish I could invest in this one. Unfortunately, I cannot. Now, number 2 is Starbucks, and I can invest in this company. I have invested in it. Again, I'm very bullish on it. I think I'm going to make money on it. I have some videos on my dividend channel talking about this one, but I see Starbucks just taking off over the next 5 years. Chipotle also number 3 at 7%. It's moving up the ranks. Starbucks is moving up the ranks. I think within a year, Starbucks will beat out Chick-fil-A. So I think the next teen survey, I think Starbucks is going to beat out Chick-fil-A. That's my prediction. With what they're doing, how they're exploding on social media, all the different custom mix-ins you're doing. They also are adding food to their stores and making that a bigger point. They're just doing so many things. They're killing it with their digital technology, with their reward system. I really think Starbucks has a good team put together. But enough on that. We move on. Number 4, McDonald's, 6%. Olive Garden, new to the list, beating out Dunkin' Donuts, and that's at 3%. So that's the top food right now. These are all ones that you can invest in aside from Chick-fil-A. That's the only one. If we keep on the food topic, we can look at the top snacks. This is another category that I like. A company that I'd like to be invested in the dividend portfolio would be Hershey's. They own so many different snacks. They control around 40 to 50% of the snack aisle. So that's a company that I'm very interested in. But we look at the top snacks here. This beats me. Goldfish number 1 at 13%. I don't know why. It's just surprising. I view Goldfish as more of like a little children's snack, not really a teenager one. It makes more sense for me to see Lay's and Cheez-Its and Doritos and Cheetos. Those seem all it just makes more sense. I don't understand Goldfish, but there you have it. The data doesn't lie. We have entertainment here. Ryan Reynolds is number 1. That makes sense. Adam Sandler, number 2, doesn't make sense in my opinion. I like Adam Sandler a lot, but what did he do over the past? I think he was in some good Netflix shows. He was in that Netflix basketball NBA drafting drama. I actually really enjoyed that one. So that might be it. I like Adam Sandler. People give him a lot of grief because he doesn't try too hard with every movie, but I actually really like him. Taylor Swift number 3, Kevin Hart number 4, Zendaya number 5. That all makes perfect sense, in my opinion. Now, we get to something that's more interesting and applicable to investing here. The daily video consumption. This is an important one. Before we look at this one, I want to reference last year's so we can get a point of reference here. The daily video consumption, or this is actually last season, Netflix is at 30%, YouTube was at 30%, and Hulu was at 8%. If we look at it updated, the most recent, Netflix actually gained in daily video consumption from 30% to 32%. YouTube went down 1% from 30 to 29, right? Yeah, from 30 to 29, and then Hulu stayed the same. So Netflix gained, YouTube moved down a little bit, Hulu stayed the same. Top social media platforms. We have TikTok here. This one is with 38%. That seems like an increase. 38%. Let's look at it last year. TikTok was 33%. So this one moved up significantly. TikTok is growing fast. Then we have Snapchat. This is the older one at 31%. Instagram at 22%. So Snapchat has actually, it's gone from, let's see, it went from 31 to 30%. So Snapchat actually lost ground, and then Instagram went from 22 to 20%. So TikTok gained a sizable market share amongst teenagers at the expense of Snapchat and Instagram. Not something you like to see if you're invested in these companies. And then finally, we have top influencers, which is different than the top celebrities. The celebrities are more movie stars and musicians. The influencers seem to be more social media personalities. Right now, number one is Andrew Tate. I've seen some news and controversy around Andrew Tate being deplatformed. I have no clue about him, what he says. I haven't kept up with that drama. So I'm not familiar with him. I'm not familiar with Emma Chamberlain either. Maybe I'm out of the loop here. I am familiar with Kanye West, Mr. Beast at number 4, and of course, Dwayne Johnson at number 5. So that makes sense. So there you have it. This is the companies that are popular with teenagers. If we go through the winners and losers, there's a lot of companies that I own that I'm happy to see are doing well. I consider them to be winners. I'd put Amazon in that category, holding a huge market share, over 50% of online shopping. The majority of teens still consider it their number one destination for online shopping. So Amazon, as big of a company as they are, they're still popular amongst this demographic. We also have Nike, another company that I own, big winner in every category. They just dominate amongst teenagers and brand awareness. Nike knows what they're doing. Ulta Beauty, have to mention that one. They control the beauty segment. They beat out everybody else. They have dominant market share. That was a big winner. We have Crocs, another company that I own that I thought did really well in the survey. They moved up to the top 5 list for Crocs brand. And then Hey Dude, the other brand that they own, is moving up. And then, of course, I can't forget Starbucks. They're a winner in this one. They moved up in the ranks a lot, and they're going to surpass Chick-fil-A. They'll do it. I think Starbucks will surpass Chick-fil-A, as amazing as Chick-fil-A is. So that's another one that I'm invested in. I'm happy to see Starbucks do well. I have to mention Chipotle as well. That one did well in this survey. I think out of all the companies that are struggling, that are losing, I think YouTube didn't do well in this survey. They were down year over year. That speaks to some temporary headwinds for Google. I think Netflix did okay. They gained market share, which is impressive that they're able to do that. I think that the biggest loser might be Meta. They have market share that they're dealing with getting stolen from TikTok. There is some incremental improvement in the VR headset, so that's one positive thing. But when your core business, Instagram, is getting market share stolen, I think that's a tough storyline for investors. That needs to reverse. They need to continue to keep their market shares. So that's my thoughts on it, my summary. I hope you enjoyed this. I like looking through these and getting some insights. So that's all this time. I'll see you in the next one.